See the sunrise in the morning glow. People hustling, moving to and fro. Money flies with the speed of light.
Sure. So first, before we get into the conversation, I thought maybe we could take a minute each to tell the audience a bit about what our individual companies do. Ashley, can we start with you, please?
Yeah, absolutely. Really pleased to be here today. I'm Ashley Onyango from the GSMA. So if you aren't familiar with it, the GSMA is the Global Mobile Industry Association. We represent over 750 mobile network operators globally. I specifically work with our member operators who have mobile money services and working on supporting their advocacy around driving enabling policy and regulation to scale and grow and continue to innovate in the digital financial services space.
Thank you. Kingsley?
Hi everyone, my name's Kingsley and I'm glad to be here. I'm told that I'm the CEO at Expedier, which is fine. Yeah, a little bit of humor, the head stands. At Expedier, we approaching mobile money, fintech, and remittance with a twist, an innovative twist, where we looked at it and the landscape is more fragmented than usual. And so we came up with an engineered solution that allows pretty much anybody from anywhere. If you wanted a bank account in any African nation, you could just spin it up in a second. And that essentially allows you to move money around the world seamlessly and effortlessly. And as they say, the rest is history.
Thank you. Victor?
Good afternoon, everyone. My name is Victor Sameria. I'm a senior associate at Templars. Templars is the full services commercial law firm in Nigeria and Ghana. What we do is basically provide legal advisory services across the board, investors looking to invest in fintechs in Nigeria and vice versa.
Fantastic. Peter, I know you've been up here before, but I'm sure there are people who weren't here in the morning, so go on.
Sure. I had M&A and corporate development at Moniepoint. Moniepoint is a digital bank platform serving customers across Africa, starting in Nigeria, where we serve some 10 million merchants and retail consumers. We provide everything from domestic payments now to international payments to banks, credit, software, business tools.
Fantastic. So before we get into what each of you does, just from where you sit, what does fintech's impact on the AfCFTA look like today, from where you all sit?
Want me to start? Sure. So I think, we have to talk about what mobile money has done for cross-border transfers and the way that it has facilitated seamless transactions, reduced costs. So, this is something that we've been following quite regularly and looking at the cost of cross-border transfers. The global average is over 6%, and mobile money has managed to reduce that down to just 3.5%, and that's massive. That can help facilitate so much scale and growth in trade across borders by reducing that cost. With many of you and those of you in the room, we're seeing more and more innovation in foreign exchange solutions. That cost of 3.5%, over half of that is the Forex margin. And when you start to look into that more deeply, you see that actually intra-Africa Forex exchange is very high. It reduces when you're going between countries within East Africa or countries within West Africa, but when you start to move it around different regions within the continent, that cost can go up drastically. So finding more fintechs that are working around innovations around Forex exchange will actually really accelerate and support this trade initiative and helping drive down those costs and make it much more affordable.
Thank you. Victor, I'll come to you next.
Thank you. So within the context of AfCFTA, we haven't really seen so much from the fintechs, and the obvious reason is because of the entry, what I refer to as the entry barriers. Okay. We tend to see a scenario where the regulatory framework has sort of move towards enabling traditional banks to play in that space as opposed to opening the space up for fintechs. That's number one. And then number two, in terms of the use case, most of the remittances fintechs that we've seen out of the market are focused on inbound remittances as opposed to outbound remittances. So that's created an obvious barrier in enabling them to operationalize the framework that we have as of today.
I see. That's interesting. Do you want to?
Yeah, I'll share. I think I guess let me step back. I see the evolution of financial services on the continent is almost kind of like a three-way race of sorts. You have banks that have the lowest cost of capital and have enjoyed a head start. You have telecommunications companies that enjoy the best distribution by way of the phone. And then you have fintechs that deliver on innovation. I think whilst, to Victor's point, you haven't seen too much from fintechs in that respect, we at Moniepoint think there's a tremendous opportunity, especially when you can kind of marry the structural advantages of those three players. So, right, at Moniepoint, we have a bit of each. The distribution of a telco in a way leverage through an agent network. The low cost of capital and the infrastructure of a bank by way of having a regulated bank and delivering on innovation in a way whereby we're able to kind of build out infrastructure in a very intentional manner. So our vision is to deliver digital banking across the continent seamlessly and do that in the most cost-efficient manner possible. And while mobile money has delivered on that on a low-cost basis within the same network, when you start to go interoperability, different story. So we see a tremendous opportunity in this space.
That's fantastic. So what do you see? I mean, you do a lot more cross-border. You're doing
Correct.
the cross-border. So what's
Correct.
it looking like?
So let's bring it home, right?
Okay.
As we all know, the AfCFTA was created to solve the fragmentation in intra-African trade, right? A friend of mine would say that intra-African trade is more fragmented than a fractured bone. It's a whole lot easier for the guy in Africa to buy stuff in Asia or the Middle East than it is to buy from its fellow African country. In fact, if we were to extrapolate on that, many of the African nations, their largest trading partners are not their fellow African countries. It's some other country outside of Africa, right? If you wanted to buy Apple from some seller in Ghana and you lived in Nigeria, you're practically unable to do that today, right? But then imagine a solution, right, where you could, from the comfort of your home, purchase that Apple in Ghana using your local currency. That's the vision, right? That, I believe, is the solution that fintech can bring in to the AfCFTA and help make that reality come to pass, right? And that's exactly the intersection where Expedier is playing, where we're enabling trading and inter-trade across Africa to be a lot more smoother and natural as it should be, using remittance as an undergirding factor to that.
Thank you very much. So I hear opportunity.
Oh, yes.
And so we're going to talk a bit more about that. So I know, actually, the GSMA just released its 2025 State of the Industry report on mobile money. So what are some key highlights for Africa?
Yeah, so if you're not familiar with this report, this is a report that we put out annually. This is our 13th edition. So we have been tracking the growth and evolution of the mobile money industry for 13 years. Highlights globally, we've reached over 2 billion accounts registered on mobile money. The industry transacted $1.68 trillion last year, which is quite impressive. Sub-Saharan Africa remains the epicenter of mobile money. So, of those 2 billion accounts, 1.1 billion of them are in Sub-Saharan Africa, which is, it's impressive. It's such a great Africa story, really. And I think what's a couple interesting things for the continent that we've seen is West Africa has now outpaced or overachieved registered accounts from East Africa. So East Africa has been the trailblazer, has been the powerhouse, and now we're seeing West Africa not just catch up, but grow over number of registered accounts over East Africa. But I think what we're seeing in East Africa in a very maturing market is the value of transactions is still really strong, that growth, over 20% growth in the amount of money that is being transacted through mobile money in East Africa. And I think that's what we can look forward to in the other regions as they grow more and more users, more and more registered accounts, more use cases. We'll start to see that value and transaction volume increase as well. A couple interesting trends that we're seeing, I mean, merchant payments is a huge one. This is one of my favorites that I always look at. So 44% growth last year in merchant payments. And to me, this is really the driver of how we're seeing the volume of transactions outpace that of value. That means that people are transacting more frequently in smaller amounts. And to me, that's a signal that this is becoming really integral in their day-to-day life, right? So when they go to spend their 100 shillings at their Mama Mbogwa shop, they're using mobile money. It's no longer just for those bigger, sending money to mom on a monthly basis or, sending money that's kind of more in bigger amounts. This is actually becoming part of their daily lives. And that's a trend we're seeing, I think, across regions and within the industry, it's something of high focus for mobile money operators.
So are there any challenges? I want to ask you about opportunities, but first of all, are there any challenges that you've seen from the report?
Yeah, a host of challenges always, right? So regulation continues to be, we see a lot of positive things around regulation and enabling policies. We also see a lot of negative things. Taxation is a huge issue. So mobile money has become a very easy digital transaction to tax. And so when governments are looking to bring in more revenue, they go to digital payments. And this is creating a really uneven playing field. We have really good data that shows that when these levies get put onto digital transactions, the affordability goes down and the transactions go down. So people are regressing to using cash, which is really in direct conflict with many of these governments' national financial inclusion strategies. So we've been able to use that data to actually see some reversals, which is really positive, but that it doesn't mean that it's over. We're still seeing this taxation, these levies put onto digital transactions, and that's really not great for the customer, it's not great for the mobile money providers, and really not great for the economy.
Thank you so much for that. Kingsley, coming to you, you're building an innovative bridge between remittances and credit building for immigrants. So how is this model reshaping digital financial services, in your opinion?
Right. So 90%, if not all of us in this room, were at some point immigrants. We immigrated from Africa, other countries, right, to North America. And then we established, we settled in, and then we begin to remit money back home because we traditionally sustain our roots, right? But then beyond just sending money back home, what else can come out of that? Right? It's not the black tax, but it is something that can be leveraged on to further support the immigrant vis-a-vis credit building. Many of the everyday transactions that the average immigrant goes through are actually credit worthy, but the existing banking system isn't interested in that ecosystem, and it's not a field they want to play in. So with us at Expedier, we looked at that and we said, okay, fine. There are actually two approaches to that. The first is the recent new immigrant who has recently immigrated from Africa to North America, and they're facing the credit barrier, right? So we help them address that. But then the other part of the coin is the already established immigrant who still needs to send money back home, but at the same time doing that, still further enhancing their credit history and making them even more credit-worthy in the North American space. There's quite a lot that can happen with remittance, and we're exploring all of those avenues.
So how do you help the immigrant who's just arrived to start and build their credit rating?
Beautiful question. So there are a few ways that we do that within Expedier, right? The first is starting off with the simple idea that you can actually get banking without necessarily walking into a banking hall. And that's an idea that up until now isn't mainstream, right? So pretty much before they even emigrate to North America, they already have their banking set up and waiting for them, right? That's the first thing, right? At the same time, they still retain access to their finances from back home, okay? Now, on arrival, we do that in several ways, one of which is that your daily transactions vis-a-vis rent payment, for example, we plug that in straight up into the system and begin to report that for you. The next evolution of that is even before arriving, we extract your already existing financial history, translate that into a North American standard, and feed that into the credit system before you even immigrate, such that on arrival, the system already knows you and can identify your credit worthiness instantly, just like that. And then as you live out your everyday life and your finances, we continue to pass on that information to the system to not only establish, but to grow your credit worthiness in North America.
That's very interesting. Thank you for sharing that. I'm sure some people will find that extremely useful. Victor, I'm coming to you next. Or actually, let me go to Peter. Let's talk about this new, is it a product, Money World?
Yeah.
Yeah, you recently launched Money World. Congratulations on that. So what's your broader strategy around Money World?
Yeah, sure. I think at Moniepoint, our goal is to provide a digital banking platform for businesses and consumers. And I think to do that well and do that effectively, we want to serve every single possible financial services need businesses or consumers may have. I think what's interesting, and I think really our strategy as it relates to that, is that we're banking on the strength of our platform and infrastructure as a key differentiating factor. What do I mean by that? Okay. When most remittance companies, essentially, especially in the fintech realm, are looking to deliver on a faster solution versus moving money via a bank. Moving money via a bank, it settles out in a while. Maybe it's T+2, T+3, and they are settling out doing instantaneous payments. In order to do that, the system on the back end doesn't actually move that fast. So most of the remittance players need or leverage float. Where it becomes interesting as a platform and an infrastructure provider with a fully regulated bank in, for example, a terminating market like Nigeria with hundreds of millions of dollars in deposits, we can settle it out instantly, and we don't, for example, we are absolved from the float issue that I would say 90% plus of remittance players face. The other aspect as well is when you think about the customer profiles and demographics, a relative in the diaspora can move money to a customer that likely already has a Moniepoint bank account. And once they're moving money to their relative back home, from a utility perspective, they can spend it on the platform, whether they're buying airtime, paying bills, paying a merchant who likely 8 times out of 10 on the other side is a Moniepoint merchant. So it now becomes a very interesting interplay as it relates to the ecosystem and building closed loop that is now geographically agnostic.
That's very interesting. So how do you see these moves you're making at Moniepoint influencing the traditional players you're talking about and policymakers?
I mean, we're here to compete. I mean, if you look at the Money World website and platform, we're pretty transparent about it. Nobody can beat the pricing amongst Nigerian, African fintech players, and part of that is facilitated in part by economies of scale on a broader platform. So we're able to pass on some of those cost savings. And I think the other piece as well, too, is that it's underpinned by a broader strategy around serving a multitude of needs versus one singular need. For a remittance player whose core business is just remittance, their economics are very different, and margins in the space are constantly under pressure.
Interesting. Still on the policy, if we have time, I'll come back to you on policy, but let me come to you, Victor. In terms of policy, what are the legal and regulatory frameworks that you think are missing today? Because you said, we started off the conversation with you saying that fintech isn't playing as much as it should in the AfCFTA space. And I'm wondering, from a legal point of view, what frameworks do you think we still need to move the dial on mobile money?
I think there are two sides to it, right, broadly speaking. But the first part is entry barriers in terms of getting licenses and being able to operate from one country to another. On that one, we have a very clear use case to leverage on. We have seen what the EU has been able to do with respect to the ability to passport various licenses across different countries. One thing that is significantly missing in terms of the use case we're looking to champion in Africa is the absence of that passporting regime. And I think in one of the panels, someone had mentioned something around Ghana having some type of partnership with Rwanda, where if you have a license in one regime, you should be able to use that across another country. So that is a very significant element that is missing. I think we need to get to a place from a regulatory perspective for fintechs to be able to passport their licenses across various jurisdictions. So that's one big elephant in the room. Another aspect is not necessarily regulatory, but it relates to interoperability in terms of infrastructure. Yes, it seems very nice that I think a couple of years ago, PAPS, led by AfCFTA, has launched a fantastic platform to integrate various regional players into that space. But one critical element, as I said, that remains missing is the ability for fintechs to plug into that framework. And in that regard, another thing we also need to be paying attention to is that a lot of fintechs or people that are looking to solve the remittances problem in Africa are looking at really the inbound rail. And that leaves room for use cases with respect to stablecoin. Essentially, that enables an infrastructure where people can seamlessly do cross-border transaction without necessarily leveraging on big infrastructures like central switches that we have across different countries in Africa. The reality is very simple. If you have to build country-specific switches for every country and look to plug them across the entire Africa, I think that's going to be a very big challenge for us to conquer. We need to start looking for ways for seamless payments to cut across different jurisdictions, whether by way of passporting licenses or leveraging on stablecoin or other infrastructure that would make that process seamless.
So, not to put you on the spot, but who do you think should lead the charge on this?
Well, I would say, I would have said the regulators, but essentially if you wait for the regulators, that may take forever. And so I would say the fintechs, essentially, as I said, in leveraging stablecoin, which for some reason seems to be a very focal challenge for central payment systems like the NIBs and all the other infrastructure that we're looking to build in Africa. It looks like those in charge of building the infrastructure or championing the cause, for some reason think the solution is by coming up with some outdated payment infrastructure that will individually plug in every fintech or traditional bank. And I don't think that is quite the way to go.
Thank you so much. Before we wrap up, I wanted to come back to you on the policy point, and what your experience has been with the regulators just before we wrap up.
Yeah, sure. I think as it relates to cross-border payments and even just looking at payments in different markets, our perspective and our stance is that we seek to operate in a fully compliant manner possible. In fact, I would say the way Moniepoint is built, it's underpinned by infrastructure and specifically licensed infrastructure. For example, in the Nigerian market today, Moniepoint probably holds every license there is to hold as a fintech. And that's how we think about it in every single geography in which we operate in. I think coming back to Victor's point around interoperability and thinking about what the infrastructure looks like in a lot of these markets, I think a broader thesis that we hold is that inherently a lot of infrastructure in a lot of these markets is built inherently in the banking infrastructure. And we think that the ability to become a fully regulated bank in each of the markets you operate in gives you a distinct advantage. So, for example, he talks about like a lot of people are building on the inbound. If you look at market like, for example, Nigeria, outbound permissions on cross-border payments are strictly reserved for commercial banks. I think what has happened to date is that we have yet to see a fintech player at scale be able to actually overcome the hurdles necessary to get those kind of licensing, whether because of capital, amongst other things. And I think it's a very interesting space. How I started my fintech career in investment banking in the US is I did the first sale of a bank to a fintech ever in the US. And we think there's room for a lot of those type of breakthroughs on the African continent.
Thank you so much. So there is opportunity. There are a lot of challenges, but what it sounds like today is that there is a lot of opportunity as we try to, help the growth of AfCFTA using fintech. And so I just wanted us to look ahead as we wrap up, and if each of you can have 1 minute to just give a bold prediction of what you think mobile money can do for regional trade across Africa. Ashley, I'll start with you again.
Great, yeah. I think someone earlier mentioned the role that SMEs play and micro businesses play in Africa, and to me, that's the heart of it, right? If we can make cross-border transfers to be seamless and affordable for micro and small businesses across regions, across countries in Africa, I think that's really where we're going to start to see economies flourish and grow and scale. So I envision a world where mobile money is really driving that, and it requires opening new corridors. It requires solving the Forex issues between African countries. But I think if we can place some bets on these small businesses to drive trade through and leveraging and using the innovation that fintechs have brought to this space, I think we're going to see really great growth, really great scale, and a lot of good things for the economies across Africa.
Thank you, Ashley. Kingsley?
Yes, we at Expedier, we envision a future in Africa where the African intertrade and the friction, it's broken down, leveraging these technologies in fintech and MoMo. Another way to look at it, it's where someone in Ghana can buy stuff in, say, Uganda using their Ghanaian cedis. And it's acceptable to the folk over in Uganda because it's the money that they could also spend in return, right? I believe that is the future where we're headed to, and we want to be at the forefront of that, both enabling and supporting that vision in Africa.
Thank you so much. Victor?
Right, I'm just going to go right onto it. I think stablecoin is the way. It's going to take a significant amount of time for individual countries to build their own infrastructure for interoperability purposes. So if I'm to provide a prediction, I think in the next 5 years, we'll see significant disruption from stablecoin with respect to intra-Africa trade.
Thank you. Peter?
I think I'll go contrarian and say in the next few years, mobile money gets challenged. I don't think it's innovated enough. If you have MTN Nigeria, you can't move money to MTN Ghana until this recent trial being done by Central Bank of Ghana.
Thank you so much.